Peace, Prophet people. Welcome back to the Absolute Boss Collective. Today, this is going to be the kickoff video to a new section in the channel called Big Homies. All right. And these big homies are going to be, popular, impactful traders or investors. I mean, cats that did it are continuing to do it, that provide lessons for us as new, young, inexperienced investors and traders. We can look at the things that these people did and use them to chart our course in this game. Okay? You know that old popular term, if it ain't broke, don't fix it. So if there's people that's out there in the past, in the present, or whatever, that have done it, let us look at what they did and learn and benefit from that. Now, this dude, word is bond. I just heard about this dude today. This is the first time I heard about him today. One of my partners sent me a video. The cat in the video mentioned the guy's last name and was talking about a style of trade. He was talking about trading breakouts, and he mentioned this name. So as he mentioned the name, he mentioned like 2 or 3 times. I'm listening to the video. I'm like, what does that mean? Let me look. And I looked and found out information on the guy. When I found out the information on the guy, I read the little bio. After I read the bio, I came across some guidelines that he scripted in 1934, son. And as I'm reading them, it is resonating with me. You know what I'm saying? It's like gospel. You know what I'm saying? So, bang, I got the idea and I said, you know what? Let me put that down so that I can share with my community here on YouTube. This is what we do at the Absolute Boss Collective. So the name of the dude is Richard Donchian. Okay. Richard Donchian, is known as the father of trend following. Okay. Now, one of the popular terms, before I even was able to dissect it and break it down and be victorious using it, I've heard the term trend following. And one of the phrases that's like a catchphrase that cats use is the trend is your friend. Okay, so if the market is going up, that's a bullish trend. You know what I'm saying? Or, it's a bullish trend. So you want to follow that trend. You want to place your bets bullish. If the market is going down, that's a bearish trend. You want to ride that bearish trend down. You know what I'm saying? You don't want to really, if it's a strong trend, you don't want to really fight against the trend. You know what I'm saying? It can work. That's called, what is that called? A contrarian strategy. A contrarian strategy. Okay? And that can be successful. But generally speaking, you do not want to go against the trend. So this dude, Richard Donchian, I'm going to call him the Don because he got Donchian in his name. Richard Donchian is the father of trend following. He is the originator of the managed money industry. The first managed fund that came out in 1949, he created that. Okay. In 1928, he graduated from Yale with a BA in economics. Okay. He created Futures Inc., a pioneer publicly held commodity fund. Commodities is, wheat, corn, sugar, all that. Check out my video, Unbridled Carnage, when I talk about trading places. Watch Trading Places. You can get a little glimpse of the commodity industry and how that game go down. You know what I'm saying? So anyway, I read this guy's history. In reading the information that I found, they mentioned this book right here. The Way of the Turtle. And this is a good book. You know what I'm saying? I'm not going to really go into this book. Y'all going to have to check out The Masked Trader when he does his thing and comes through. One of these days, he'll probably cover this and you'll get to see the jewels that's in this book. However, I did acknowledge this book. I did read this book a while back. You know what I'm saying? It's not what I expected. Like, I bought it for a different reason. And even though it wasn't what I expected, it was a very good book. And there was always lessons in here. You know what I'm saying? Knowledge is power. So we're going to get into the Donchian theory. We're going to dissect that a little bit by talking about his guidelines. That, again, these guidelines was first published in 1934, son. That's way back in the days, B. That's way back in the days. And me reading it today, and I've been trading for about 10 years, it just resonated with me so much. Powerful, powerful information. So get your notebook ready. Here you go. 1, beware of acting immediately on a widespread public opinion. Even if correct, it will usually delay the move. Okay? 2, from a period of dullness and inactivity, watch for and prepare to follow a move in the direction in which volume increases. Limit losses and ride profits, irrespective of all other rules. Like commitments are advisable when market position is not certain. Clearly defined moves are signaled frequently enough to make life interesting, and concentration on these moves will prevent unprofitable whipsawing. If you don't know what whipsawing means, leave a comment down below and I'll answer that for you, kid. Okay? Seldom take a position in the direction of an immediately preceding 3-day move. Wait for a 1-day reversal. Judicious use of stop orders is a valuable aid to profitable trading. Stops may be used to protect profits, limit losses, and from certain formations such as triangular foci to take positions. Stop orders are apt to be more valuable and less treacherous if used in proper relation to the chart formation. That's like a rhyme right there. Treacherous, proper relation, chart formation. I'll drop that one of these days. All right. In a market in which upswings are likely to equal or exceed downswings, heavier positions should be taken for the upswings. For percentage reasons, a decline from 50 to 25 will net only 50% profit, whereas an advance from 25 to 50 will net 100% profit. Heavy, Joe, heavy. In taking a position, price orders are allowable. In closing a position, use market orders. Buy strong acting, strong background commodities, and sell weak ones, subject to all other rules. Moves in which rails lead or participate strongly are usually more worth following than moves in rails that lag. A study of the capitalization of a company, the degree of activity of an issue, and whether an issue is a lethargic truck horse or a spirited racehorse is fully as important as a study of statistical reports. Son, to me, that is like a Christian being in a church and the preacher is really preaching it. You know what I'm saying? It's like reading Psalms, son. This is like some real, and the dude wrote this in 1934. Okay? I'm sharing it with y'all. This is for the new section I'm going to start on the channel called Big Homies. Check that out. Okay? This is Absolute from the Absolute Boss Collective, telling you to look, listen, and learn. Work, wait, and win. Peace.